Will the stock market recover next week? That's the big question on every trader's mind. The S&P 500 and Nasdaq 100 have faced pullbacks, but will they bounce back or break down further? In this video, I'll analyze the latest price action, identify the key support and resistance levels, and check what the fear and greed index is telling us about the market sentiments. Plus, we will look into the technical signals that the traders are watching right now. If you want to stay ahead in the market and make an informed decision, make sure to watch till end. Don't forget to like, share, subscribe, and follow. Let's begin. Fear and greed index currently reads at 20. What does it mean? It is in the extreme fear zone. Has the market sentiments changed over the past week? No. 1 week ago also it was reading 20. So there is no change in the market sentiments. Can anyone predict the market? Absolutely not. What we can do, we can only find the probabilities. If risk to reward ratio is favorable, we trade. Otherwise, we don't trade. This is the monthly price chart for S&P 500 index. There are some well-definite price action which can be observed on the price chart. Whenever there is a bear market like 2022 and bear market of 2020, price corrects and takes support at EMA 55. This is the blue color line that represents the EMA 55. But whenever there is a correction during the overall uptrending market, the price takes support at EMA 21. But whenever there is a shallow correction, price do not even test the EMA 21. So whether this time the correction which has started after S&P 500 hit all-time high of 6,147, will the price correct to EMA 21? One possibility is yes. If it corrects to EMA 21, we might see a correction going up to 5,300 level, because currently EMA 21 reads at 5,340 level. Before that, let us understand why this correction is taking place. We can see the price was facing resistance after it hit the all-time high since past 3 months. Now, there is a breakout of this price pattern. There was a breakout over here. So prior trend was bullish. So this can be considered as a cup and handle pattern in larger time perspective. So if we calculate the target on the basis of this price pattern, it has achieved the target of 100% expansion, and then this correction has started. So once the correction is over and there is a rebound in the price may go to the next level of 6,500 to 6,600 level, which is the obvious next potential target. Whether price will bounce back from the current level or not, let us check the retracement level. So if we do the retracement analysis, so what does it indicate? The price has tested 38.2% retracement level, which is nothing but the derivative of the golden ratio. So there is a possibility that the market may bounce back from this important level. Let us go to the weekly price chart. In weekly price chart, the price is correcting since past 3 weeks and in a row. In the last week, S&P 500 finally closed at 5,770.2, and hence it was bearish by 3.1%. So there was a major fall. That is why the fear and greed index has gone to extreme fear zone. But that is a cyclic phenomenon. So if it is in an extreme fear zone, the market may recover from here. Now, what we can see, earlier price has taken support here. Price support is here. Earlier it formed the cup and handle pattern. So this becomes the neckline. So immediate support is 5,600 level, and there is a confluence of EMA 55 as well. So there is a significant possibility that the price may bounce back from this important level. Let us go to daily price chart. If we want to measure the correction, the extent of correction in the recent time after it has made a peak is around 8%. So what we can see during the last trading session of the last session, the market gap down and then there is a recovery in the price action. There is a large lower shadow of the last candle, which indicates that the buying is forthcoming. This is the neckline area. This is a cup and handle pattern. This is a handle portion. So 5,600 is an important support in immediate terms. So where is the resistance on upside move? The first resistance at around 5,900 level over here. We can see the price rejection over here, and there is a point of inflection of EMA 21 and EMA 55, which is at around 6,000. So 5,860 to 6,000 is an important supply area. Once this supply area is taken out, probably this may not be a big problem as a resistance. It will give a breakout and then move to the next potential target. Why current bounce back is very important during the last trading session of the last week? Because the earlier also the price has taken support over here and the price is bouncing from the key support area. So price is currently trading quite in proximity of the support area. We might expect some kind of bounce back in the forthcoming week. This is the monthly price chart of Nasdaq 100. What we can see here, whenever there is a deeper correction during the bear market, price respects here too on EMA 55. Here it has done it in 2020. This was the bear market of 2022. And then it formed this kind of continuation chart pattern. This is a handle portion. So this is a cup and handle pattern. If we calculate the target on the basis of this cup and handle pattern, so it has attained the first target based on this cup and handle chart pattern, and then there is a loss of upside momentum and the correction has started. So the next potential target, whenever there is a resumption in the trend, could be to 24,000, which is a long-term target for Nasdaq 100. This is the weekly price chart of Nasdaq 100. What we can observe, in prior corrections, it has tested EMA 55, it has tested EMA 55, and once again, during the last week's candle, if you see, there is a large lower shadow formation in the last candle, which indicates that the price is respecting the support of EMA 55. And this is the resistance area. This was the consolidation band. So it is bouncing from the key support area, which is very, very significant. In the last week, Nasdaq 100 closed at 20,201.37, and hence it was bearish by 3.27%, which was a significant fall in the last week. And prior 2 weeks also, we had witnessed some kind of corrections in Nasdaq 100. This is the daily price chart. Earlier, we discussed about a gap which was existing at 20,249, and this gap has been filled, which is a good news. There is a good support at 19,300 to 19,500. You can see here, this area is an important support area, and the price has come quite in proximity of the support area. And then during the last trading session of the last week, the formation of the candle formed the bullish piercing candlestick pattern with a large lower shadow that indicates bulls are coming slowly into control of the market. Where is the potential resistance? This area is the area of support and this is the area of resistance. So 20,600 could be the immediate resistance area, and then there is a point of inflection of EMA 21 to EMA 55 at 21,300. So this zone is an important supply area. What do you think? Will S&P 500 and Nasdaq 100 recover next week, or more downside is ahead? Let me know in the comments. If you found this analysis helpful, don't forget to like, share, subscribe, and follow for more updates. See you in the next video.